Greetings! Today we're going to talk about something that's super important when it comes to tracking and reducing greenhouse gas emissions, the 3 scopes of emissions as defined by the Greenhouse Gas (GHG) protocol. We'll start with Scope 1 emissions. These are direct emissions. Imagine you own a factory that produces goods. The emissions that come directly from sources that you own or control, like your factory's boilers, furnaces, or vehicles, are classified as Scope 1 emissions. These are the most obvious and easiest to measure because they happen right there on your property. The second is Scope 2 emissions. These are indirect emissions from purchased energy. Your factory also needs electricity to run. The emissions that come from the generation of that purchased electricity, heat, or steam are called Scope 2 emissions. Even though you're not directly burning fossil fuels on site, the power plant that supplies you energy is, and those emissions are attributed to your operations. The third and final scope is Scope 3 emissions, other indirect emissions. Now, this is where things get a little more complex. Scope 3 emissions are all the other indirect emissions that happen throughout your value chain, both upstream and downstream. Upstream activities include things like the extraction and production of the raw materials you use, as well as the transportation of those materials to your factory. Downstream activities cover things like the distribution and transportation of your products, the emissions from employees commuting to work, and even the eventual disposal or recycling of your products after they've been used. So, as you can see, Scope 3 emissions can be quite broad and challenging to measure accurately, but they're often the biggest chunk of a company's overall carbon footprint. Why is this important, you ask? Well, if you're serious about reducing your environmental impact, you need to understand and account for all 3 scopes of emissions. Just focusing on Scope 1 and 2 emissions might not give you the full picture. By breaking down your emissions into these 3 categories, you can identify hotspots and prioritize your efforts to tackle the most significant sources of greenhouse gases across your entire value chain. And that's the scoop on the 3 scopes of emissions. Understanding this framework is the first step towards taking meaningful action to reduce your carbon footprint and contribute to a more sustainable future. If you found this short climate accounting video useful, we'd appreciate it very much if you left a like. And if you'd like to hear more nuggets on carbon accounting and more broadly on climate and climate tech, please do subscribe and click on the bell to enable notifications of when we upload. Finally, we offer the friendliest, easiest to follow climate accounting course in the world that requires no prior knowledge or expertise. So if you're looking to calculate the carbon footprint of your business or organization, or you would like to charge clients to calculate their carbon emissions, we're offering this course with an exclusive 10% off if you use the code YouTube. For more information, see the link in the description or head to footprintconsulting.org/courses.